Hello, ladies and gentlemen. February 21st, 2023. We're back with charts and news. I took a week off. I was slacking a little bit, but I was still keeping an eye on the markets, and now we're back into this. Okay, let's go. Be sure to like and subscribe. Subscription is key. I tell you guys all the time. We got valuable insight on this channel. This will help you become a better trader, control your emotions, and make some money. Let's do this. So first things first, we're going to look at the indices. The Dow Jones, the S&P 500, and the NASDAQ. So all three of these indexes are either very close to crossing below or below the 30-day moving average. The Dow Jones has this green candlestick, which was Friday, that topped out touching the 30-day moving average. But today, looking at futures, looks like a red day and will probably open below the 30-day moving average. But I want you guys to keep an eye on the 30-day moving average because it dictates a lot of price momentum. And if price is below it, it's bearish. If price is above it, it's bullish. And I'll show you guys the S&P 500. So the S&P 500 has it below it. And this is futures, actually. So let's look at SPX. But before we look at SPX, I want you guys to look at this triangle. So we have to see which way it's going to break out of this triangle. You can do the same. I had it drawn out for the Dow Jones as well. There's a triangle there. Which way is it going to break out? As a matter of fact, the Dow has it right on the downside of that triangle, and it's looking like it wants to break below. Could break above. I don't know, because for the Dow, it's so tight. It could be here by today. But we have a red MACD. QQE signals is signaling long. Consolidation periods are very hard to determine. And that's what. So let's see with the SPX, with the 30-day moving average. So it's right below it right now. But we have a sort of a southern doji, gapping down doji. And we can actually take a look at that in a second, which I'm going to do actually. But first, let's look at the NASDAQ, which also has a gapping down doji. This is just the futures. The 30-day moving average is right there. But if we go on to, let's go to QQQ. There's this gapping down doji. And I want to find out what that usually means for these type of indexes. But the 30-day moving average is furthest away for the NASDAQ without a doubt, because in these past 30 days, it's been on the most vicious run out of all three of the indexes. And it's been doing nothing but going up. But what the NASDAQ and the S&P 500 have in common is that they broke out of these channels to the downside. Right? The S&P 500 did the same thing. Red MACD over here. QQE is short for the NASDAQ. Let's take a look at a 1-hour chart. No clear direction right now. You could now, since this channel is no longer existent, you could even draw out a line like this now. See what happens there. But then again, guys, this is all like today. There's a good guys. The thing with TA is you want something cool to happen every day. It's not the case. Sometimes you just gotta like sit there and be bored. There's a good chance with these three indexes that nothing important happens today. I mean, there's a good chance it does too with those 30-day moving averages. We have to see does it go above or below, and what that means. But keep an eye, guys. Don't make any impulsive trades. Same with the 10-year yield here. This could dictate stock movements, guys. So, like, look. We don't know if yields going up or down is bullish or bearish for stocks in the coming future, as this risk on to risk off correlation is getting more negative and negative every day. It's kind of astonishing, if I'm being honest. But ever since November 10th, the 10-year yield has been trading between 3.9 and 3.44, or no, let's be precise here. 3.32. And it's been in this channel. I'm actually going to move this for that long, which is a long time. But would you look at this green candlestick over here that wants to go up? Could it fake? Of course it could. As a matter of fact, we're looking at consolidation periods on the dollar right now, and I'm going to show you guys that. But yeah, so keep an eye on that. That's crazy. Tesla looks like it wants to go down so badly. This is bearish divergence on the RSI. Bing. That's number one. Bearish divergence. This is the 38.2% retracement, this yellow line from a very, very long time ago. From Tesla's peak, actually, in October 2021. So that's a long retracement. This is 38.2. It's one of the most significant retracements. It failed there, and it's expected to fail again, as this blue line is the 200-day moving average. And it rejected there as well. With bearish divergence now forming and an extremely overbought stock, I see red. Oh, and a possibly newly born MACD. So you see that thing turn red. Shorting Tesla, risk to reward ratio is great in my opinion, but it's up to you. The dollar, last equity we're gonna look at. So look at this. So like I told you, consolidation periods, it's a bull flag. It's these channels. This channel has been active for about the same time as the 10-year yield channel. But the only difference is this one already broke out to the upside. Now it's just consolidating. So you guys can use other equities to bet on even more equities. Usually when the dollar goes up, yields go up because people are selling bonds and going towards the dollar. And if this is showing upside potential, then it's an even better reason to bet on yields showing upside potential and, in fact, bonds showing downside potential. But yeah.